Good morning and welcome to the SONDREL Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Graham Curran, CEO. Good morning, sir.
Good morning. Thank you, Lily, for that introduction, and thank you everybody for giving up your time to join us today. I'd like to, for those who haven't met me, I'm Graham Curran. I'm the founder and CEO at SONDREL, and I'm very pleased to have with me Nick Stone today, who has joined us just a week ago as interim CFO. So, of course, we'll be very happy to take questions. Please go easy on him. He's only had a week in the job, but I'm sure between us we'll manage to answer everything, hopefully, or if not, come back to you for sure. So let's start with our recent earnings update. So our trading update that we gave a month ago was clearly not good news for us or for anybody else. It was not clearly expected. I think it's down to a couple of different things. Well, it's principally down to the fact that customers, particularly in the EMEA, so the European and Middle Eastern region, are somewhat nervous about their future direction and the finance and the way that they are going to spend the money. So we had a number of projects that we were expecting to start during the half year delayed into next year, and that caused a hole in our revenue that was given to us at somewhat short notice. So we are in the process of recovering that. Of course, we have a number of designs in our backlog, a number of customers that are expected to engage with us over the coming months, which will fill that back up again. This is a situation that we have seen many times before, although it's always frustrating when it happens. Of course, something we've dealt with many times and will continue to deal with this time. I think, as I've just mentioned, the European market is a little bit cautious about committing capital to big projects. These are big projects not only in terms of value, when they will be typically 10, 20, 30 million pounds, but also their long-term commitments for the company. And that's probably the big issue here, is once the project is started, you're looking at a production a couple of years out. And that means that you really want to be confident that your end customers are both going to be there and you've got the product right. And that's what our customers in this case are looking for. They're still very, very committed to these projects. We still expect them to go ahead at some point, although we're not counting on it, I have to say. You know, when this happens, we need to focus on the other projects as well. So it's if they get further delayed or indeed don't happen, then that won't be any more of an issue to us. But right now, it's caused some issues in the nearer term. It's not put us off our medium-term objective. We're still very, very confident about hitting our medium term and hitting the 100 million. We're still on track to get our first designs in production later this year. There has been some confusion over this. The delays relate to projects which we have not yet started. They do not relate to projects that we have ongoing. They do not relate to any delays in current schedules for production. So just to be clear on that point, we're still expecting production revenue from our first projects this year, and I'll come back and give you a little bit more detail on that in a minute. I think the most encouraging thing for us, or two really, really encouraging things for us, one is our penetration to the US market, which is going very well. So we now are talking to 18 potential customers there, which is much better than we were expecting. The team that we have on board now are doing a great job. And again, I'll come back to that again in a minute. And also our pipeline, our production pipeline is one of our KPIs, and probably our most important KPI for future business in the medium term, which has increased as we get close to production. This is the amount of production that our customers are telling us they are likely to buy over the product lifetime. So that's over the next few years, which has now increased to $170 million. Now, I do have to stress this is their forecast, not ours, but as we are getting closer to the launch dates for their products, these forecasts are hardening and also going upwards, which we see as very encouraging. We have a number of new projects in discussion. I think it's also encouraging that all our existing customers have repeat business that we are and repeat pipelines that we are working through with them right now. So that's designs that could come in over the coming months, as well as the new projects. I think on the previous slide I mentioned that there are a lot of projects in the US, but there is also a number of projects in the European region that we're working at. We continue to make long-term investments, and we continue to have very strong staff retention. I think the staff here are very positive about the outcomes and very positive about the future, and remain so. So that's really helping us to drive where we're going. One of the potential barriers to US penetration is our brand is not well known in the US. That was a risk that we saw. In fact, it's not come out. The team that we have are well known and well established in the region. And indeed, we're getting extremely good support from our partners out there, from people like TSMC, Synopsys, and ARM, to help us establish our credibility. And going on sales calls and going to see customers and getting references from them is very valuable to us, and we very much appreciate the support that they give us in that area. Let me hand over to Nick, who will just talk you through some of the KPIs and some of the financial numbers.
Thank you, Graham. And just to echo what Graham said, it's day 8 for me in the business, so I'll talk you through some of the numbers as best I am, but any sort of detailed questions I may struggle with at this stage. So but please bear that in mind. Just a very short bit of background on me. I have worked in several other small listed companies over the years, in particular one engineering and tech company, which, although it was a different engineering discipline, had a number of facets similar in terms of its revenue profiles and long-term projects. So I have some relevant experience that I can hope to bring to bear over the coming months in support of Graham and the board, working through this this next phase of the business's transition. So with that, on to the KPIs. I think if you've seen the company's presentations before, these should be familiar. Clearly, the cash position, we will talk about this, and I'm sure there'll be questions as well, but the cash position is the one negative on this slide, and I will come back to that in a moment. But all the other KPIs, and in particular the production pipeline, as Graham's already mentioned, are actually moving in the right direction, and we see positives in each of those others. Moving on then to the highlights, you can see revenue year on year was up, and we'll see on the next slide. But in particular, the revenue from the ASEC projects is up significantly, which is an indication of progress in the group's strategic development from into the project and production area, which it has sought to achieve. The adjusted EBITDA, which is adjusted for one-off costs, there was a restructuring and a shutdown of the engineering office in China during the period, and in the prior period there was some IPO costs. Adjusted PBT, slightly higher interest costs, and the weight of the restructuring versus the IPO costs was significantly higher, and therefore the PBT or the loss before tax is higher. EPS and statutory profit after tax follow in line. During the period, the last of the debt that the business had pre-IPO was repaid. But on the last line, you can see that the cash balance was at a bare minimum at the end of June. There has, though, and we disclosed this in the statement, been a significant project payment since the end of the period, I think 2.5 million, and that typifies the nature of the cash receipts in the business. Whilst the business was doing consulting and service revenue, it would expect payments, regular payments on a monthly basis. Moving into the project arena, the payments tend to be based on milestones, and they therefore are lumpy and are dependent on the project progress, achieving the milestones before the invoice can be issued and the cash received. And that's not going to change over the coming months. And as we look at the cash forecast going forward, the job in hand is to try and match the receipts from those projects with the significant supplier payments that are required on the other side of the balance sheet. I'll come back to that in a moment when we look at the balance sheet slide. Then the income statement, I think much of this is as you might expect. You can see the ASIC's revenue is up around 50%, which is an indication of real progress on the strategic shift, as I mentioned. Cost of sales is a combination actually of variable costs and fixed costs. Some of the fixed engineering costs and R&D costs are allocated to the projects and therefore form part of cost of sales, but there are also some significant variable costs in there as well. Admin expenses slightly lower. I mentioned the one-off costs earlier. The other operating income is actually R&D tax credits. Probably no surprise to you that a business of this sort is able to claim these R&D tax credits from HMRC on a regular basis, and they're currently running at something over £2 million a year. This is actually a source of liquidity for the company. It is possible to borrow money against those R&D tax credit expenditures during the period in which you're incurring them, and that is something that the business has done and is actively doing at the moment in order to try and improve the liquidity situation. Moving on then to the balance sheet, you can one of the things to note here is the high level of intangible assets, which relates to the software that the business uses. And that is accounted for under IFRS 16 as a finance lease, and therefore the total cost of that software is set up as an asset, and the liabilities being the present value of the future payments against those software contracts is put in the lower half of the balance sheet. So the other long-term payables, for example, are the payments due under those leases in future years. It's also worth noting when we're looking at this slide, the trade and other receivable balances is quite high, and there's a couple of reasons for this. Revenue accounting for long-term projects is the revenue is recognised on the basis of project progress. That doesn't necessarily, and often doesn't, tie in with the instance of milestones and therefore the invoicing and cash receipts. So in this period, we have seen a worsening of working capital, if you like, in that there is now about £7.5 million worth of project receivables on the balance sheet, and that is work that has been done but not yet invoiced, and will be invoiced as those milestones are hit over the coming months. And that just shows you on the balance sheet the reference I made earlier to lumpy project payments that are due over the coming months. And finally, on this section, the cash flow statement. Within the cash flow, you can also see the impact of the finance leases for the software. You can see the amortization of those leases is a non-cash adjustment at the top, and the investing activities is the payments made for the acquisition of those software. You can also see clearly the working capital, the impact of the working capital worsening, which I mentioned on the balance sheet slide. So I expect we'll come back to the cash position with questions later. We've certainly had one or two on the pre-submitted questions, but we'll leave it at that for the moment, and I'll hand back to Graham.
Good, thank you, Nick. Let me move on and just talk to you a little bit about the business in general and where we're going. And let me just start that with an overview of the semiconductor market. The graph in the middle comes from WSTS, and I put this in here just to demonstrate the variations that we typically see in the worldwide semi market. Now that I think you can see from this that as an industry we are very used to very wide swings. So large changes in the revenue for any particular part of this is something that we are very used to, and we have very flexible business models to cope with this. You know, as a company, we use a lot of contractors in our design work, of course, so that we can move those around. We shift people between working on projects for customers and working projects on managing our internal R&D. And we have a number of other things that we can do to manage the situations when projects move around. You can see here that the industry is used to swings which can be 40, 50, 60% in either direction in a period. So it can be quite dramatic. But as I say, for us at least, for those who are not used to the industry, this might seem quite large, but for us not so. And the current situation with the fall in second half is not something that we are unused to dealing with. I think what has surprised many in the industry this year is not really the downturn, but the length of the downturn. And the quote on the left-hand side demonstrates TSMC, indeed, who are clearly one of the most connected companies as they own such a large proportion of the silicon supply. We're also surprised by the slower than expected recovery. From what we can see, certainly, whilst the US is doing well, the EMEA region is still rather slow to recover. It's certainly in the segments in which we operate. I think around some of the other types of the use of silicon, power electronics, for example, things have recovered a lot more quickly than in the areas that we operate in. We still consider there is no change here in our position for growth. As I've said earlier on, we're still very optimistic about our business plan. We think we're doing exactly the right things. The overall semiconductor market forecast to reach $1 trillion by 2030 is unchanged, as is the general movement in silicon technology, with reaching again 1 trillion transistors on a chip by 2030 and the associated values with all those. So all that's moving. The drivers for the market continue to be very similar around the high performance compute and particularly artificial intelligence. Many of the chips that we are working on today have got some sort of artificial intelligence support within them. We're still seeing this as a big driver for a lot of different applications, everything from medical applications all the way through to automotive imaging, image recognition systems, and so on. We are maybe in the automotive market, there is a little bit more instability at the moment. A few years ago, there was a very strong push around the assisted autonomous driving world. That went through a bit of a bubble, which has now backed off. And for those of you who look at particularly the US startups and those that went through SPAC mergers a few years ago have struggled since. But also the European market and others are maybe a little bit unsure about the direction, facing a lot of competition, both from Tesla, but also from the Chinese. And if you go to motor shows now, you'll see them very heavily with a very, very strong Chinese influence around companies such as Volvo, Lotus, but also many of the Chinese brands that are starting to penetrate the market. And I think that's causing a lot of delays, it may be in decision-making as people try to work out the right things to do there. Everything else, though, continues in a positive direction. I've already mentioned the excellent support that we get both from TSMC and ARM, and also Synopsys, and our engagements with the foundries, and also with the packaging and test houses, where we are one of the relatively small number of companies able to engage directly with them, continues well. One of the big drivers for our business, of course, in the future as we go ahead is going to be the move to production. We're still on schedule for taking our first production orders later on this year. The delays that we saw did not relate to the production. They are continuing, and they should start to contribute as we move towards the end of this year and into next year. And that's, again, is very positive about where we are right now. And if I just put a little bit more colour on those projects that we've talked about, these are the 4 projects that we've already mentioned publicly. I just want to share with you where they are in the design cycle. So for those who are not familiar with this wheel, we start our engagements at number 1 at about 1 o'clock, where we will sit down typically with a client and talk to them about what they're trying to achieve, and then we will architect and produce the solution, and that's all that first segment there. That whole design engagement takes in the order of 12 to 18 months, and in some cases longer than that. We get paid throughout that cycle, and then we move into the prototyping cycle, where we ship the design database off to the foundry who manufactures the silicon. We accept that silicon, and then we package it and test it, and then we ship at the end of that segment, after that sort of 6-month period, we ship the silicon to the customers. We mentioned yesterday publicly that we now have 3 customers with silicon in their hands, that they're testing it on the bench. Results are so far good. That process will carry on for a while as they check that the products meet the specification, meet the needs in the application, and in some cases ship them off to their end customers, so their end customers can also get confidence in the product itself. And we have a number of other tests that we do in parallel at the same time. And once those tests are complete, customers will move into production, and that's being the 3rd segment here. And production cycles, as you can see, run 3 to 10 years, that sort of order, with a wide variability in it. So we now have 3 products which are, as I say, with the customers at the end of that 2nd segment. The automotive ASIC, which is bigger and more complex, and therefore takes longer to develop, moving through towards the end of the design cycle, and when we're moving into prototyping in the relatively near future. If you looked at this 6 months ago, of course, you'd have seen all of those in the 1st segment. So that's good progress. It's where we want it to be, and it's clearly fueling the future. We have all of those customers are in discussions about the next chips in their roadmaps, which could start in the coming months. But in addition, of course, we have a number of other products. So as those start to move into production, we'll be bringing other products into that wheel and adding to them. And over time, that will aggregate as we get more and more products into production and help to drive our revenue. The other way that we look at this is this, that again, many of you will have seen before. So the 4 major streams to revenue for us are the design, which is really linked to the engineering headcount, and we expect that to stay fairly stable or grow slightly over the coming years. Equally, the third-party IP that we buy, that's things like microprocessors from ARM and so on, that we incorporate into the devices. Again, that's a rising cost as design complexity increases, then that will increase our revenue as well. The 3rd pillar here is what we call the NPI, new product introduction. That's everything around setting up the chips, taking the database and setting up for production. So it includes the largest value item, which is the masks cost. And a set of masks for a process can be anything from hundreds of thousands of dollars up to $10+ million for the latest processes. And that's one of the components that can make our revenue very volatile. You can imagine that if we have a £10 million mask set, in which will be recognized over just a few months, and that moves from one half year to the next half year, or indeed the other way around, it can make a big difference to our revenue profile, and of course dramatically change the revenue. So that's just something to be aware of. Things will move around a lot. We don't expect our revenue to be a very smooth sort of water company type of growth. We do expect it to jump around, but our onward trajectory needs to be very strongly positive. And then finally, and this is not really to scale, we would expect our production to reach maybe 60 to 80% of our total revenue over time. as we start to move into that later on this year, you should start to see some revenue coming through, with more next year. I think the analyst report, which I'm sure you've all seen, talks in the order of a couple of £1 million next year as production revenue. I just wanted to give you a little bit of insight into the US. So I've mentioned already that our US sales penetration is going very well. Our office is established now in Santa Clara, right in the heart of Silicon Valley. We have staff there with engineers and sales operating there, very well-known people with a lot of activity there. If you look at the proportion of our sales activity that's coming from the US, that's the blue bars here. So this is just demonstrating the proportion. You'll see that we still have a small amount of activity in China, which is the green blob. But the majority of the shift has been, as we would expect, from the European to the US sales pipeline. And this is absolutely not a reflection, by the way, of Europe going down. It's entirely a reflection of the US going up. We would expect that to continue. If we look at our competitors, those Asian companies that are already public, we can see from their numbers that they are looking at in the order of 40 to 50% of their business coming from the US, something like 40% from China and the remainder from Japan. Of course, it varies by customer, but pretty well nothing from Europe, certainly single figures from Europe. So we would expect the proportion for our US business to reflect that sort of ratio over time. And given that a few years ago, all our business was from Europe, then we expect this to be opening up lots and lots of opportunities, as indeed we're already seeing. And I think we mentioned already that we currently have 17 or 18 customers that we're actively talking to about new generation projects, up from only a very small number at the beginning of this year. So great progress in the US. The two major things that we wanted to do at the IPO were to grow the US pipeline and to grow the backlog of production devices. And both those have been very, very successful this year. So we're very pleased with our progress through the year. So just to finish off, I think, yes, we've had, it was very disappointing to us, and I'm sure to those of you who are shareholders, to see our revenue targets for the second half of this year not being met, and not being met by a substantial margin. We understand the reasons for those. We think that is very much down to market conditions. It's something we've seen before, and it's something we know how to cope with, and we'll manage through that. What's much, much more important to us is our medium-term outlook, which again is the production volumes, getting these chips through that wheel, through towards the production, and making sure that they're delivered successfully to our customers, and growing our new customer base in the US. And both those, which is the focus very much of the management team, have gone very well over the last 12 months, and we remain very confident of those as we move into 2024. Okay, and that is the end of the presentation. So we're very happy to take questions from you now. Thank you.
Great, Graham, Nick, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. Nick, could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thank you. First question is around the competitive landscape. Who do we consider to be direct competitors in ASIC design, and where are they located?
So good question, and thank you. Magically, the slides have turned to the answer to that question, which is in the appendix there. So if I take the ASIC customers in general, I really put them into three categories. There are the very large companies like Broadcom and Marvell and others, and they will be shipping standard products, but they will also engage with customers on an application-specific basis. If you are very large and you are, for example, Sony, and you're going to do your next PlayStation chip, in the past they have gone to AMD and said, I want a chip, especially for my application, will you do it? The answer may well be yes, provided the amount of money and the volume and the production commitments are high enough. You can imagine for Sony PlayStation, I suspect they're probably pretty high. We don't compete against those companies. That's not the part of the market we work in. At the other end of the market, you have people doing typically mixed signal designs. These are typically smaller designs with smaller values, and in older technologies, they tend to use some very clever engineering. And Silica, you'll probably be familiar with. Great bunch of engineers, very capable company. The projects tend to be much smaller, and the cleverness, if you like, is in the analog design and the RF design that they do. We compete much more in the sort of middle segment, where we're looking at newer technology designs. The values of each engagement tend to be considerably higher there. And there are about 8 companies that we consider to be our direct competitors here, out of which 3 of those we very rarely see or follow a different business model. So, for example, VeriSilicon's China-based, although they were doing a lot in the West up until a few years ago. With the current tensions, we don't see them. So there's really 3 out of that we would say are our competitors, and that's GUC, Alchip, and Socionext. They're all public. GUC and Alchip are public in Taiwan, Socionext in Japan. You can go and pick up their research notes and their reports, which I would encourage you to do. They're very detailed. They give a lot of information about their markets. It enables us very much to model our business about where they are. So hence we can see what proportions of work they do in the different geographies, in the different market segments, the different technologies. We can see what their net margins are and their growth and their market caps are versus their revenue and so on. So I would encourage you to go and see those. But those are our 3 major competitors. Of course, there's a lots of small people we see from time to time. Probably the biggest competitor for us is people not going ahead with projects and making sure and delaying decisions, and that's something that we need to manage, and we need to make sure that our sales pipeline is strong enough to support that.
Graham, there's another question on a related theme, which is around NVIDIA and a view that they are dominating the market for AI chips, and how can we hope to compete with them?
So NVIDIA produce a general purpose chip. So you can go and buy an NVIDIA chip and it will do lots of different things for you. Our customers are those who want a chip for which are much more focused application area. And the reason they want to do that is really twofold. One is that by making sure the chip is focused on what they want, they can make it much more efficient. So typically lower power is what they want. And they can also make it cheaper. And indeed, they can also make it better at the job that they particularly want to do. Just think of it, the parallel in just hand tools, for example. If you use exactly the right tool for a job, you'll get a better job than you will if you use a more general purpose tool. So whilst NVIDIA, of course, is the go-to for general purpose, it's quick, it's easy, you can get it into your system. If you start to really make inroads, you may well want to consider having a really focused version of that. You can see that Apple did that in their iPhones many years ago, moving away from general purpose processors and putting specific ones into their phones. You can see people like Amazon and Google doing it in their data centers and moving away from general purpose processors into specific ones that either they or companies like ours have designed for them. And that's where we see. So we see a lot of companies who maybe could use an NVIDIA chip, but really want something that is more focused for them. Just to give you an idea, a big NVIDIA chip is going to cost you thousands of pounds, and it could use 500 to a kilowatt in operation. So if you can save a proportion of that, you can have very substantial savings, and that's a big driver of the ASIC adoption today and the growth in the ASIC market in general.
Okay. There's the next question is that I've not seen this, but apparently on Vox Markets, there's a comment that the reason for the delays of our projects was because of a lack of competitive advantage of the chips. If you want to comment on that one, Graham.
Yeah, so I know Paul, of course, and I've spoken to him, and I think this is a misunderstanding of what he said here slightly. Firstly, the delays were not about delays in production of the existing customers. There were no delays to that. The revenue problem for the second half of this year is due to starts of new project engagements. It's people making the decision to start a project that is not ongoing. Our existing projects, as I've shown you earlier on, are going to schedule and are going well. So that's one slight part. The change was not on those new projects, was not anything to do with the competitive advantage, and indeed the chips that we've designed are going very well, and you can see the customer forecasts are very strong for those. It's more about for our customers an uncertainty of where the consumers are going to be and what's really going to hit the sweet spot in the market in a few years' time. You see the design cycles here are quite long, and therefore they need to be quite confident when they start. So it's more a matter of just settling down, making sure that maybe the first generation of chips that they've already got from us hits the sweet spot, or do they want to change the spec? It is very common for companies to do a first chip and then come back for a second chip, which is a variation on the first. But of course, if you're going to make a variation, you want to make sure that you're varying it in the right way. So getting a bit more market understanding on your first chip, again, is something that people do. It's not uncommon. It's just a little bit extended with a caution at the moment.
Okay, we've then got two questions on whether management or the board will be buying shares at the current low prices, which I think is not something we can answer specifically at this stage, but clearly if there is any such activity, it'll be announced and you'll find out. I don't know if you want to add anything, Graham.
I would say that there are members of staff here, without drawing any details, who are buying and do think that the current share price. Of course, I'm personally very heavily invested in the company as well, and so we are both as a board and a management team very confident about the future.
Then we've got, I think, three questions around cash. What can we do to improve the cash flow, and also questions as to whether we believe we will need to raise more funds. And I guess from my point of view, clearly I've just arrived, and the focus over the coming weeks, months, is going to be making sure that the forecasts we've got are robust, both in terms of revenue recognition and cash, and looking at what we can do to improve the cash receipts, and whether that's around project timing or negotiation with customers, and on the other side of the balance sheet, looking at what we can do to negotiate with suppliers to ensure that the supplier payments are aligned up with the receipts from the project. So it's a cash position that needs to be managed very carefully. Graham, I don't know if you want to add anything.
I think you answered that very well, Nick. I haven't got anything to add from that. Oh, maybe just to say that this is for 20 years as a private company, we had a lot less cash than we do now, and we managed that very successfully. We're used to managing cash inflows and outflows, matching milestones. We're very used to managing suppliers. We have very strong relationships with our suppliers, established over 20 years in many cases. They understand our business model very well, and they're very supportive and continue to be very supportive of that.
Okay, we've also got a question on whether there's been any institutional selling. There was an RNS that was put out, I think, on the 5th of September, that one institution has reduced its holding. And clearly, if there's any more such activity, again, that'll be disclosed as appropriate. The follow-up on that is, are we planning to meet institutions? And of course we are. We've been available over yesterday and today, and I think we probably have in total had at least 10, maybe 12 meetings with institutions where we'll be taking the both current and non-holders through this same presentation and answering their questions. So we're certainly trying to be transparent and available with institutional investors as far as we can.
And let me add, that's on top of we had a number of investor meetings, of course, following the August earnings announcement as well. So yes, we are keeping quite busy in that area.
Next question, Graham, and I think you've answered some of this in the presentation already, is that the US looks like a big opportunity, and what investment is needed to maximise this potential?
Yes, I mean, it is a huge opportunity for us. You know, if we had infinite funds, maybe we would have 100 people in a big design centre there. But we have to take it a stage at a time. And as I mentioned earlier on, it's going better than we expected at this stage. I think for those, if you know or get to talk to people who are based in the Valley, I think it's really quite, and I was there just a couple of weeks ago, it's really quite striking that the enthusiasm and the optimism, and indeed you get comments like, really, is the people a bit concerned about things in Europe? As if they never really occurred to them. How much of that is from the sort of inherent optimism that they tend to get in the States anyway? I think there's also the CHIPS Act, the US CHIPS Act of $45 billion funding, which is giving people a lot more confidence as well, and starting things going. Maybe some of the European equivalents, which was just came into force today, actually. I was just reading in the press this morning. It was sort of the 45 billion euros will start to do the same and give confidence in Europe, although a lot of it is initially targeted certainly towards the foundries. And even the UK's $1 billion investment in semiconductors may start to come through at some point, although we are still waiting to see any details relating to that one. But I think certainly the US is a very bullish market right now.
And on a similar vein, Graham, there's a question on how we define our sales pipeline. At what stage does a customer enter the pipeline that we've talked about in the US?
Yeah, that's an interesting question. So they enter the pipeline when we have a real project that we're talking to them about, and we've signed non-disclosure agreements with them. So we have real details of the projects. Typically a specification, in fact, almost always there will be a specification associated with the work that they want us to engage in. So we know that these are real devices. Of course, on top of that, we have, I think, an awful lot of what you might call leads. That is, people that we know are doing chips, people we know that will be doing a chip next year, and so on, that we know that we will be talking to at the appropriate time. But the sales pipeline is real devices that have been identified.
Next question is around which brokers are covering the stock. We had a analyst meeting yesterday morning, and we had probably 8 or 10 interested parties and brokers there. So there's certainly a lot of interest in the story from the city analysts, but there is only one broker covering the stock at the moment, which is Cavendish, or Senkos as was now rebranded after their merger with FinCap, and analyst reports are available publicly. If either follow the link on our website or on the London Stock Exchange website, or go directly to Cavendish with a couple of clicks and an email address, you're able to get hold of that research. Graham, next question is lots of new board appointments, and how are they integrating? I assume this is related to both Anthony and Ollie, who've joined the business recently, I guess, as well as myself.
Yeah, indeed. Well, maybe you can answer for yourself there, Nick. I mean, these are not board appointments, just to be clear, but these are part of the senior management team. And yes, both Anthony and Ollie have been with us. I think Ollie's now been with us for 2 weeks and Anthony for a couple of months, very well indeed. I think they're sort of being caught up, both in the obviously entering the company. We're just at the time at which we do a warnings on our revenue can be somewhat surprising, shall I say. But I think they're also very much caught up in the excitement and enthusiasm that you see within the teams here, and with the opportunities, and they're already hit the ground running, really making a great contribution, and yeah, we're enjoying working together already.
And for my part, I'm looking forward to getting to know them better, and obviously working with Graham and the rest of the board, as I indicated earlier, over the coming months. Next question: are we looking for any opportunities in the faster growing economies like India?
So we don't have an active sales effort in India specifically. Obviously, if we hear about opportunities, then we may well address them, but finding opportunities right now is not our biggest challenge. We do have a finite sales team. These sales engagements are complicated and they take a lot of effort. So we do need to manage that and focus very carefully. So we focus a lot on our strengths. Part of the challenge for us is to make sure that we really engage in the customers that we are most likely to be able to support well, and that are most likely to go to production. So there is quite a having customers too spread out over the world, of course, becomes very difficult to support. So we need very strong local engineering support for each one of these engagements, and therefore we are quite heavily focused on certain geographies, and indeed also on certain markets, particularly around imaging and AI, which is very much our background and where we have some very strong history and good credibility.
Another question on how we can better predict project schedule of our clients and improve forecasting. And I guess two things come to my mind in this. Firstly is the very appointments that we were just talking about. I mean, part of the new head of sales and Anthony as COO is to, and they both bring sort of larger company disciplines with them, and part of their role and my role will be to make sure that we can do everything we can to understand the projects, to get closer to our clients, and so we understand their thinking so that our forecasting can be improved. Have you got anything to add, Graham?
No, I know it's a bit of a cliche, but our success is very much tied up to our customers' success here. So we do work very hard to get to know what's important to them. And like all complex engineering projects, there are a lot of trade-offs to be made along the way as to things like, is time to market important? Is performance important? Is power consumption important? Getting very close, both from an engineering point of view and also a business point of view, and understanding them. We need to, if we look at, say, unit cost, there's a lot of different components make up unit cost, and we need to understand what their business really requires. Is it lifetime failures? Is it quality? Is it temperature range? What is it? And so getting very close to our customers. So we have very strong relationships to a very high level within all of those, and we help to bring our knowledge to bear on their success. But ultimately, our success is going to be very heavily linked to their ability to sell their products into the market. Our whole company's bonus scheme is built around our customer success and their success. So that's what's very important to us.
Right, and the final question we still have in front of us is what do the directors think of the current share price, given we currently trade at less than 1 times current year's sales?
Yeah, people keep telling me what our share price is, and I keep not looking at it. I was told at the IPO, don't keep looking at your share price, which is a habit I've got into. We are just focused on the business. Clearly, we are not intending to sell shares. None of the team here are in the market to sell. We believe that we have some fantastic opportunities. So we're really, really just focused on the business that we have in hand and making our customers successful. And that will drive through for the that will drive through the share price and the rewards for all our backers that we think they deserve in the coming years.
Graham, Nick, thank you. And I think you've addressed all those questions you can from investors. And of course, the company can review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, Graham, could I please just ask you for a few closing comments?
Yeah, so well, thank you for your time today, for taking the trouble to hear us out. We're really looking forward to a good future. I hope you'll join the journey with us, and thank you for your questions. It's been very good to talk to you all.
Graham, Nick, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of SONDREL Holdings PLC, we'd like to thank you for attending today's presentation. Good morning to you.
Thank you.
Thank you.